everyone, welcome back to my channel. It's Nazak Badarshia back with another video. Today, Zoom's earnings were fantastic, but its stock still went down. Why is that? So before we address this question and discuss Zoom's earnings, I'd like to say that I'm not a financial advisor and you should always do your own due diligence and research before taking part in any investment scheme. Let's get into it. Woohoo! All right. Here we go. So Zoom shares plummet in after-hours trading despite beating earnings expectations. Why is that? Let's see. Okay, Zoom recorded its fiscal 2022 earnings after the bell on Monday, beating analysis expectations on the top and bottom line. Fantastic. But the company's growth has slowed as businesses and schools reopen. Company stock was down over 10% in after-hours trading. Here are the most important numbers from the report compared to what Wall Street expected, is compiled by Bloomberg. Revenue, 102 billion versus 990 million expected. Amazing. Earnings per share, 136 versus 116 expected. The company also issued guidance for the third quarter that fell just below expectations, with guidance of revenue between 1.015 billion and 1.02 billion, and earnings per share between $1.07 and $1.08. Analysts polled by Refinitiv had predicted 1.013 billion in revenue and earnings per share of $1.09. Okay, next. This one is Zoom Video Logs first $1 billion quarter with the stock is still falling. Okay, so in quarter two, we achieved our first $1 billion revenue quarter while delivering strong profitability and cash flow, Zoom Chief Executive Eric Yuan said in the statement announcing the results. While most companies would be ecstatic with sales growth of 54%, that is actually the smallest year-over-year growth that Zoom has had in its recorded history. According to FactSet, which tracks its revenue growth back to April 2018, a year before the company's initial public offering. The previous low was 77.9% in the quarter ended January 2020, just before the effects of COVID-19 pandemic washed over the world. So basically, as schools and everything opens up, they don't really have that many people to buy their products, right? There's their video calling, video calling plans, and all the stuff that they do. So let's continue on with more pieces. So Zoom stock dived as much as 12% extended trade. So let's look at that. So it was doing all right, doing quite all right today. But then from 5:47:50 at 4 o'clock, it had a sharp plunge to 307, back up to 347, and then just down to 305. So that's been pretty bad for Zoom. And I feel like the main thing is what's getting Zoom like this is because they have a lot of supply, right? They have a lot of supply, which is their services that they can offer, video calling, group chatting, messaging, but they don't have a demand. People they don't need Zoom anymore. That's my opinion. Now, do your own research. But they don't need Zoom anymore. There isn't as much demand. You always need supply and demand, right? So there's not much demand for Zoom anymore. And that's why its stock is going down. It's like plummeting down like crazy. And Zoom is diving like 12%. That's why all this chaotic stuff is happening. Their earnings were great, however. So in conclusion, Zoom is falling because of the less demand of video calling now that schools are open. Their earnings were great, however. And thank you guys for watching this video. I hope you enjoyed this video, found this information helpful. Please be sure to like, comment, subscribe. And if you made it till the end of this video, if you're one of those lovely, beautiful people, please be sure to comment powder puff in the comments below. Thank you guys and see you later. Bye.